trading stock adjustment. So there's two possibilities. You either have a deficit or you have a surplus. What does that mean? Well, let's start with what are you doing? You are comparing your books, which is basically the balance that you'll find in your general ledger or in your trial balance, you're comparing it with the shelves. So what is physically in your shop on the shelves? And that you'll find because you're doing a stock take, you're counting your stock, and that number will unfortunately not be exactly the same as what you found in your books. And therefore you need to adjust. So if they're talking about a deficit, it means you are probably short on your stock and you will have to make an adjustment within your books. If they're talking about a surplus, it might mean that there is too much recorded or there is more stock than what you've got in your books. So again, you need to make an adjustment for your trading stock. The ideal would be that this number that's on your shelves is what's in your books. So you're going to have to adjust your books so that you get that stock take number, if I can call it that. So let's see what the reasons would be for a deficit. We start with a deficit. So the possibility here could be that there was some theft. It can even be your employees or customers shoplifting. There could have been some damages. If you've got consumables, then there could have been rain, leakages, shrinkage, or something's become obsolete. And on the other side, you could also have some calculation problems with either your bookkeeper or whoever is doing the markup on your items on the computer system, or there could be omissions, like you received stock, you purchased it, and nobody recorded it in your books. So these two have specifically got to do with recording and internal control. Those are your reasons for possibly having a deficit. For a surplus, you will only look at the second two reasons, which is all got to do with recording. So let's take an example now, and let's see. You go to your trial balance, you find trading stock on the debit side, so that's your balance now for the past 12 months. What is the value of your trading stock at the moment? 45,780. That's our example. In your information, it states that you counted your stock. You did a physical count, and you only found 45. Immediately, you realize, okay, whoops, 780,000 Rand is missing. So it was either theft, damage, calculation, or an omission mistake. Let's take a look at the general ledger. What's going to happen there with the 780 Rand? I need to take it out of trading stock. Trading stock's an asset and it decreases on the left. So that my new balance, when I balance it properly, then it comes to 45, which is exactly what I want. I want what I counted in my books. So I'm going to decrease it on the opposite side. But I need a double entry for that on the debit. So 780 is going in trading stock deficit, which is a nominal account. It's an expense, and it makes my owner's equity go down or the expense plus. There's my debit, there's my credit, and the adjustment is made. Now let's go back and let's say I have a surplus. So I'm going to make some changes to the actual information. First of all, you must take note that theft and damage is not relevant for a surplus. A surplus will specifically be got to do with your recording that was done wrong, and that's why you have a surplus. This example, let's say now you counted 46. Whoa, that is more than what you've got in your books, okay? So if I go to my general ledger, I'm going to leave the balance the same, 45,780. But if I want it to be 46, I need to add 220 Rand on this side, and then my new balance will be correct, 46,000. So I did a debit. I'm going to have a double entry as a credit. So this is called your surplus. This is the one where you're smiling about a mistake. Doesn't happen often. And it's an income. Owner's equity goes up. And there's your credit and there's your debit for your adjustment of a surplus. Please take note, for trading stock, there is no reversals. Your books are actually now 100% correct because of the stock take that you did. So we're going to leave it as it is. We're not going to reverse it on the 1st of March.